Now, next one, IFRS 8. Operating segments. Yeah. Okay, what is the core principle of IFRS 8? Entity should disclose information to enable users of its financial statements to evaluate the nature and financial impacts of the businesses. You can have hundreds of businesses. What are the nature of those businesses? What are the financial impacts of those businesses that you engage in? Also, your company engages in business activities in a particular environment. What is the nature of that environment? What is the financial impact of that environment on your entity, right? You are enabling your users to evaluate that thing. That is the core principle of IFRS 8. Understandable? Yeah? What businesses you operate in? What are the nature of those businesses? You do 10 businesses. What businesses you do? What are the financial impacts of the businesses that you do on your overall profit, loss, revenue, asset, liability, etc. Right? Provide disclosure so that your users can understand that, can evaluate that. Understandable? Now, IFRS 8. This IFRS 8 applies to individual financial statements of an entity or consolidated financial statements of a group of entity for parent, okay, if that entity, any entity or the parent, is a listed company, public listed company, or if that entity is in the process of obtaining a stock exchange listing. That means this required only for listed companies. Or if you are in the process of obtaining a stock exchange listing, meaning you are filing your financial statements or you are in the process of filing your financial statements with the Security Exchange Commission for obtaining a stock exchange listing. In that case, this IFRS 8 will be applicable for your entity. Clear? Now, reduction of duplication means what? A parent company may provide segment reports based on the consolidated statement. In that case, this entity doesn't need to produce another set of segment report for its individual statements. Just one set is enough. You do not need to prepare another set for your individual statements. Now let's take a look at operating segments. What is operating segment? An operating segment is a component of an entity. It can be a division. Say for example, Samsung. Samsung sells televisions, computers, printers, mobile phones, right? We can divide Samsung into many product divisions. There can be also geographical segmentation. Think about Unilever. Unilever has operation in Bangladesh, India, Pakistan, many other countries. That is a component of business, right? This component must engage in business activities and earn revenue and also incur cost. Say for example, your head office. Head office should not be considered as a segment. Why? Because head office is not earning revenue, maybe. In that case, head office will not be a segment. But British American Tobacco, your company, you have Chittagong branch. That is a segment. So it must engage in business activity, earn revenue, and incur cost. It may have external revenue, internal revenue, or both. Whatever type of revenue is there, we accept it. We are good with that, right? Even if it is internal revenue. Do you understand what is internal revenue? Internal revenue? Interdivision transfer maybe. Right. Right, right. You are just supplying raw material to another division and you are charging a price. Good enough. And the next condition, for this component of your business, discrete financial information is available, right? That means you can report it at least. If financial information is not available, what you will report? Then, next, there can be many such kind of things in your company, but all those will not qualify as operating segment. There is another major condition, that is performance of this component is regularly reviewed by chief operational decision maker of the entity for making decisions such as resource allocation. How much resource to be allocated to computer division, how much resource to be allocated to mobile division or television division. In order to make that kind of decision, who reviews the performance? Chief operating decision maker. Maybe the CEO or CFO or someone of that kind of designation. So what are the conditions of operating segment? Engages in business activity, earns revenue, incurs cost, has discrete financial information available, reviewed by chief operational decision maker on a regular basis for decision making such as resource allocation. Next, reportable segment. If we talk about big companies may have hundreds and thousands of segments. If you include all those hundreds and thousands of segments in your annual report will be cluttered, right? So we will not report all of the segments. You have operation in 100 countries, that is geographical segment. We are not making 100 segments in our annual reports. Then our annual financial report will be cluttered, right? So we will find out material segments, big segments. Understandable? Material or big segments. If your segment can report 10% or more revenue of the total organizational revenue, considering both internal and external sales, interdivision sales and external sales, then this is a reportable segment. Based on revenue, what is the percentage threshold? 10% or more of total revenue. It will be a reportable segment. Next, if your segment's profit or loss is 10% or more of the profit-making segments of the entity, then this is again our reportable segment. Similarly, if the profit or loss of your segment is 10% or more of the loss-making segment of the entity, then again it will be reportable segments. Think about this. You have 4 segments. 2 segments are making profit, $100 million. If this segment has $10 million profit or loss, it will be reportable segment. Another 2 segments are loss making. They are incurring like $15 million loss. If any segment reports 1.5 million either profit or loss, this segment will become a reportable segment. Then decision based on asset. If asset of a segment is 10% or more of total organization's asset, this is significant again. This will become a reportable segment. Okay, understandable? Now there is a threshold. What is that threshold? Maybe your organization has, say, 5 segments. And out of these 5 segments, maybe 2 segments qualifies as reportable segment. Let's make percentages, some percentages, like 35% and 35%, maybe. This segment is reporting 35% of total revenue. This segment is reporting 35% of total organization's revenue. So total 70%. Maybe you have many other segments, okay? Now, there is another principle provided by our standard, that is reportable segments must cover at least 75% of total external revenue of the entity. How much you have covered? 70%. But required coverage is at least 75%. In that case, what you need to do? You need to bring other non-reportable segments and report those in order to meet these threshold. Those are like 5%, 4%. We need to bring those non-reportable smaller segments in your report and cover this 75% segment. Understandable? Threshold. Yes, but maybe these segments are reporting only 2%, 3%, 5%. None of these segments are reporting 10% or more. So those are not reportable by nature, by size. But still you need to report those to cover 75% of external revenue.
10% should be internal or external revenue.
Right.
5%
Right. External revenue must be covered by your segment reports. 75% significant. Yeah, significant. Right. Now, aggregation principle. Two or more operating segments may be aggregated as a single operating segment if they have similar economic characteristics. Say, for example, you have 5 shops selling the same product. You should not report them as 5 separate segments, rather aggregate them and report them as one single segment. All these 5 shops are selling mobile phone showroom, Samsung. Right. Different location doesn't matter. They are selling mobile phones. They have similar economic characteristics. Should be aggregated as one segment. Now here comes disclosures. First, explanation how you have identified your segments. Then product and services. What product and services are sold by that segment to earn revenue? If you have aggregated your segments, what are the aggregation criteria? External sales, internal sales, and total sales of a segment. Expenses of the segments. Profit or loss of each of the segment. Asset of the segment. Right. Then reconciliation between total external sales and reported under segment reports. Similarly, reconciliation between total assets of the entity and how much you have reported under your segment reports. Similarly, how much profit or loss you have reported under your segment reports in your 3-4 segments, and what is the total profit or loss of the whole entity. Additionally, you need to report geographical performance and position. Right, that is compulsory. You have made a segment reporting based on product division, mobile phone, computer, printers, televisions, right? Other things. Also, you need to show geographical performance and position. How much you have earned from Bangladesh, how much you have earned from India, right? From UK, like that. Understandable, I believe. And transaction, big transaction with major customers. Yeah. This one. হ্যাঁ